All right. So what I'm gonna be doing today, I have a community with loan officers that I help with their mortgage brokerage, and we've recently added a commercial section into it. So this was our introduction to commercial business lending. And so since it's this introductory, I was inviting other people in if they wanted to kind of see it, because I know commercial can be this like taboo topic for loan officers. And it was for me, and it's taken me a good 5 years to really like grasp how it works, what needs to be done, how you do it. And so that's something I am very passionate about sharing with loan officers and people in the industry, because I think that all of us should have more than one way to make income, and it fits so naturally into what we do. But then there's definitely challenges that I'll explain as we go through. And so the questions I'm going to answer today in this is like, how do you start originating commercial or making money from commercial? What types of loans are commercial financing? What kind of licensing do you need? Like, what are the biggest pitfalls that we experience in commercial, and where to start with commercial? And so just to introduce myself and my business partner, Andre. I always say everyone usually knows Andre. They don't know me. He's the social butterfly. I'm the mom having kids and running businesses behind the scenes typically. But we've both been mortgage brokers for close to 20 years. And we shifted our business last year. And we still have a mortgage brokerage, but we now opened, we're doing consulting. We have a community and we have a franchise model. So we help other loan officers open their own mortgage brokerages. So just that's what we do now. And the main place for commercial was when we launched our community, which was a course for loan officers. It was originally just how do you open a mortgage brokerage for residential loans. But I kept hearing people asking for commercial and business loans and how do you do it? So that's why we added it to the community. And we also added it to our franchise model, so people could also add that business, that income stream into what they're already doing. Because the biggest thing for me throughout like my years learning how to build the different businesses that Andre and I have, my husband and I have, is that it takes so long to learn this stuff and to get it right and not make mistakes and waste money or waste time. That, I've always had coaches. I've always had like how you'll see where I learned commercial. There's commercial programs out there. They're pretty expensive. I'm talking, I think I paid at the time 5 years ago, 15,000. There's some for 25,000, which I just think is too much money. I think there should be a more natural way for people to plug into this information. And so I always say, don't recreate the wheel, like use somebody else's wheel and do what they're doing if it's working. And so in case I didn't introduce myself, I'm Megan Marsh. Let me make sure there's nobody trying to come in here. My name's Megan Marsh. And if somebody told me 5 years ago that I wouldn't be originating loans, mortgages anymore, I would think you were absolutely freaking insane. I produced a super high level. I was closing roughly 300 loans a year. To today, I am not producing at all. That was a really hard shift for me, because I feel like we place our value in originating a lot of the time. But I really strongly believe in additional income. I just think it is so important for all of us because of what's going on right now in the market. It's important for our realtor partners. It's important for us. It's important for our families. And my husband and I focused on this, over the last 10 years as we built our businesses to where, with our businesses being down in one area, it doesn't affect us in when the market's doing this. And I would love to see other people have that same comfort level by building other businesses that are so closely correlated to what you already do. And so I not only just focus on this commercial piece, but there's other ways that you can earn additional income. Commercial lending is such a great like gateway into that. So how I got started in commercial lending, I bought my first investment property 20 years ago in 2004. It was a 2-unit that I lived in. And then my husband and I kept buying investments. We bought our first, we started our first true like business in 2008, and bought our first commercial building in 2008 through local bank lender. We had been through the gamut with local banks with how they lend. Trying to get money for a startup is nearly impossible. And trying to get money for a building is pretty expensive. Over between 2008, when we started our first building, to 2015, we purchased probably another 20 buildings, a number of businesses. So we started really figuring out the combination of how to do it and to do it without needing a ton of money. And it was 2019 that I opened our commercial brokerage. That was when I figured, we're going to just start slamming out and getting $100,000 checks, which didn't happen. It can happen, but it didn't. And then in 2024 is when we launched our community and our franchise, where we're teaching others how to do it, because hopefully it doesn't take anyone else 5 years to figure all this stuff out. And so I always like this picture, because I was like, there's got to be a better way to do this, to figure it out. Why isn't there more help? Why don't more mortgage brokers have a division that offers commercial? And so that's why we created the roadmap. So let's start digging into commercial. Like, what is it? And the way I have to explain it is, what is residential first, so you can kind of see the difference. So when you think of residential lending, like, how does it work? So loan officers typically use one loan system. So if you use Arrive, Lending Pad, hopefully not Encompass, sorry. You have one system. So you can do all your loans pretty much out of one system. You have usually one application link, and then you have, Fannie Freddie's underwriting systems. I shouldn't say one, there's really 4. LP, DU, you use one fee sheet typically, and banks offer similar products. So you could sign up with 4 or 5 lenders, and most of them are going to have conventional, FHA, VA, USDA, and then maybe you sign up with other lenders because they have like one niche thing that they have or do. And it kind of, I like to, I'm very visual. So I drew this map here where it's like, okay, you could have 3 banks as a residential mortgage broker. I know most of us have more than that, but each one has, like I said, those loans, and then they might have something different. And we're usually lending 80% of the time on some type of single family home. It could be a condo, it could be a manufactured home, but they're all still single family homes. Now, when I started trying to figure out commercial, like, something's happened in the last 5 years too, for everyone to understand. The amount of people that are opening businesses and just the whole gig economy, like, it has literally started exploding at a rate 8 times faster than the US economy. So I guarantee you, your database that you're currently working with has a ton of people who are self-employed. And that's what I started noticing, as I was helping people who own businesses that needed other types of financing. And it helped me start researching and finding other products that even the first person that I went through his program, he never taught us about some of the loans that I've learned how to do, that I think are some of the easiest and best ways to kind of start when you're getting into commercial. So commercial lending, how does it work? There's no license required in 95% of the states out there. You must create most of the stuff you're going to work with. It isn't like residential, where you can plug into these loan systems, where there's a portal that you can, like Loan Sifter, where you can get a list of banks. They're the closest thing to being able to kind of source some banks is in the Scotsman Guide, creating a free account on their website. So you can try to put a scenario in. So they've tried, because they also believe very strongly in commercial. They've tried to make it easier for loan officers to connect with banks. but it still doesn't solve the problem of like really trying to vet banks and figure out where they go. Types of loan options you can learn. Here's just a few. There's SBA loans, 0 to 10% down buying a building. Bridge loans, if you need to do something fast, that's what a bridge loan is. It's bridging time till you can go to the loan that you really need. Hard money loans, if there's like hair on the deal, if there's something funky like a current owner didn't do financials correctly, or it's commingled with other businesses. It happens more than you think. Multi-units, over 4 units. There's lines of credit businesses need. When a client wants to buy a building for their, oh, sorry, it's on the left. When a client wants to buy a building for their business, when a client wants to buy a business, there are loans secured by investment portfolios and 401ks. Didn't know about those. And so, you know, my mind, I swear, has been blown over the last number of years as I've learned some of the products that we can originate and do in the commercial space. So there's and you're going to hear me say buckets quite a bit here. I call commercial loans like as buckets. So there's commercial loans with the real estate. That's what most of us think of is, okay, real estate. It's a loan tied to a piece of something. Which has different loan types and different property types. And then there's these other loans, and there's lots of them. There's business loans, equipment loans, loans to start businesses, loans for condo associations. And really it comes down to you can refer deals and broker deals in this space. So unlike residential, you can actually refer deals and get paid to refer on the commercial side, or you can broker them yourself if you create the setup within your brokerage or as a separate brokerage. And that really is going to depend on your setup and, you know, if you're a loan officer, broker, but there are multiple ways. And the thing that, gosh, did I not put the picture? No, here it is. Got it. There, I'm going to pull up this picture right here. So this is a picture of commercial now when I talk about buckets. So when you, at least when I entered commercial, it's like, oh, I'm going to do commercial. Well, I didn't realize that this is what commercial was. Commercial is all these buckets. So on the left, there's SBA loans, which means if a business is going to occupy the building or already occupies the building, then they will most likely do SBA, or, you know, most of them are going to their local banks right now. There below that is business financing. So there's no real estate. So that's where the equipment loans, accounts receivable loans, lines of credit, advances. There's even, I have not done this type yet, consumer lending. So meaning a business needs financing for their customers where you can assist it. It's probably the closest thing you can get to residual income in our line of work. And then on the right side is all the investor deals. So when someone buys a building that they're not putting their business in, they're going to let somebody else live in it as a, you know, as a home, or they let a business go into it. So the ones on the top are rentals. That's like the DSCR loans that we know. I call them the gray area. And then there's the investor commercial deal types. So the investor deal types are stuff like bridge loans, hard money, private money, mezzanine, equity financing. There's Fannie Freddie in the commercial space. There's sub debt financing. It's like second loans. Then there's rehab and construction is the next bucket where, you know, builders want to build spec homes, and there's developer loans. There's rehab. And then the last bucket is unique properties. And that's properties that can only be used pretty much for that purpose, for what they stand. So like a church, a gas station, storage units, like okay, what could you sell storage units to a doctor to use it? No, you couldn't do that. Like, so that's what special use is. So those are the buckets. And so when you go into commercial, and this is why it's very hard when somebody like in the groups will say, hey, I've got this deal, what bank should I go to? And why someone who knows commercial can't give you a bank name, because with this little map here, there are different lenders for every single, not just bucket, but the sub buckets of the buckets, there is no lender who does all of this. Commercial lenders typically niche. They niche and they decide they typically like 1 to 3 things. So they might like to do, over on the right, they might like to do investor deals with hard money, in this situation with these types of buildings. Whereas then other lenders do SBA lending, and they just do SBA 7A loans for deals that are between 1 million and 5 million. So commercial lenders are extremely, extremely niched down. You once in a while will find some lenders who will do a broader range of products. They do exist. But they're, it's like they're not as good at one thing. They're kind of just broad. So you've got to have a pretty clean deal. And so with commercial, if you're thinking about getting into it, there are 3 ways that you can really do it, which is you can do it actively, meaning you dig right in, you decide what you want to focus on and you learn it. You can do it semi-actively, where there are, you can start signing up for banks, but a lot of the banks, you can do it more like a referral to them. You can do that with brokers too, or you can do it passively where you're like, I'm not going to do this, but I'm going to at least have an outlet for my customers and people who ask me. And you can receive checks on commercial and business lending, unlike residential. And so I have tested a lot of them. And like I said, I've had our commercial brokerage for 5 years, and it's taken me 5 years because I've wasted a lot of time trying to find the right bank or lender, where if I would have just referred it, I probably could have saved myself a lot of time. And now we bucket down more into certain niches. But I have tried, like what kind of checks can you get just to refer deals? It depends on the deal size. It depends on the type of loan. I mean, even just referring, usually I would say between 0.5 point to 1 point to refer. It also depends on how much you're okay with them charging your customer. Even the little smaller business loan deals, like you can get, I was testing them last year, some different deals. These are just tiny little business loan deals where you can make some checks and some side income from doing this. I think the business loans are a great place to start. And so last thing here, commercial building types. This is also what complicates commercial, is that you not only have the buckets of the types of loans that people need, but you have building types. So, you've got retail buildings, you have warehouses, manufacturing, office buildings, specific use, multifamily, land and development, farm and agriculture, mixed use, strip malls. And then, let's see. So my number one suggestion for anyone is, if you want to succeed in commercial and you want to get off to a good start, you should pick a bucket. Like pick one of the buckets, either I'm going to do business financing for businesses and do business loans and SBA and just get really good at those and figuring out those lenders. Or specific use. So those churches, gas stations, storage units, like really focus on that for your first year, get good at those lenders, or do multifamily and rentals or construction and renovation. Those are like at least 4 buckets that, there's a couple ways you can bucket it, but that's kind of what we're doing at our brokerage. Is we have someone who is focusing on certain buckets. It's easier said than done. I know that typically, because if you start talking about this, you're going to have people coming from all different buckets. But if you really want to learn it, picking a bucket for you to learn, refer the other ones to someone else is probably the best way to do it. And so how do you kind of plug in? Depends on, where you are, where you work. You can learn commercial by joining a brokerage that has a true commercial division or company. You can refer commercial deals if the brokerage you're at, or if you're a broker owner, you can refer them until you get that set up, until you learn, and they are nice referral fees. And then, or you can start your own commercial brokerage you start by opening an LLC and starting to build out your commercial structure. Okay. So what do you need to learn to be able to do commercial? So you need to learn about business credit, how business credit, like how a business builds its credit, how to improve credit, because most businesses, like credit doesn't just appear like residential credit reports. Like a business has to be very intentional about having business credit. You need to learn about business types. So if you do mortgages and you work with self-employed people, really understanding the types of businesses that someone has, like understanding, are they a partnership? Are they an S corp? Can you read the financial statements? So the next thing, reading and creating financial statements is a big thing in commercial. And so if you're not good at that, you've got to get good at it. You've got to, at least for certain buckets, because part of like SBA loans, especially, you need to know how to read financial statements, because what you're doing is you're looking at a business someone's buying, or you're looking at a business and somebody's buying a building, and you need to be able to look at their financial statements and know how much money they're making and say, okay, they can afford this payment, or this new buyer who's going to buy this business. Well, there's a salary of 250,000 on the financials. This new buyer isn't going to pay themselves 250. They're going to pay themselves probably 75, 80,000. So look, their cash flow is going to go from 0 to now 100,000. So you should approve this loan. So you do have to read financial statements. If you're doing more of the investment properties, you have to really understand, the financials of investment properties, the Schedule E type financials of rent rolls. And so you do have to dig deeper into this if you want to be successful at commercial. The one you don't need to know how to do financials is the business loans. The business loans are probably the most simple loans I've ever seen. If you have a strong credit score borrower, you need bank statements and a driver's license, and they sometimes close in less than 10 days. Blew my mind. You have to learn about the deal types and the documents needed. And you need to learn how to present a commercial deal to a lender so that the people, on the other hand, approve them. These are commercial loans are not run through automated systems like residential loans. Commercial loans are people deciding. Have you ever heard of loan committee? Like at local banks, it's a group of people who sit around a table and they review deals and decide if they're going to approve them. That's how commercial works. Right now, during all this AI, and if you've ever heard people say that like our jobs are going to be replaced by AI, commercial is probably the most job security you could ever find, because right now it's people deciding. There is no AI in commercial yet. It's not even digitized like other industries. Digitize, if that's even a word. So how do you find and work with commercial lenders? So you can go out and find them. Like I was saying before, the Scotsman website, you create that free account. If, it'll at least give you lenders, and then you can contact them and take notes. That's what we did for years, is we would contact a bank. We'd have like a document in our folder for that bank, and we'd take notes about what type of deal that lender did, what they required. You can purchase somebody else's program. Like I said, the one that I purchased was like 15,000. But it's very expensive. So I did add the commercial lending to the lab. It's $250 a month. We just started building it out, so it's got a lot in there, but it's going to continue to become very robust. We're going to be adding the lenders in there, what they do, the documents they need, and every week we go over topics on how to do different deal types within the buckets we just walked through. And then once you find a lender, on the right here, you sign up with that lender. They're going to ask you for your company information. They're going to ask you for your federal tax ID. They're going to ask you for your address. They're going to ask you for your bank information to send your the checks on deals that you close. And just like in residential, it's not the same though, because it's not as regulated. So you just have to sign up with them and they have to have your information. It's usually 1 to 3 pages. And so like, this is the type of stuff that we're going through in our community is, okay, what are the skills needed? Like the financial statement learning, what are the tools? There are tools and resources out there. There are websites that give you templates that you can use in commercial. Learning about how rates are determined, the documents is probably one of the biggest things, because lenders each have their own documents. But what happens is somebody reaches out to you to do a commercial deal. And if you use a lender's documents that you're not going to end up using that lender, which you really don't know until you move along, then you got to ask this customer to go sign another set of docs and another set of docs. So creating your own set of templated documents is the most efficient way to start with commercial. So I'm going to show you here how a commercial's evaluated, like how that loan committee I just talked about works and what they look at. And it's different by deal types. But when they underwrite, there are 5 main things that they look at. So they look at character, and it's the C's. They look at character, capacity, capital, condition, and collateral. So character is the borrower. Like, what is the borrower's experience? That's why they'll ask for resumes, is something they ask for. Resumes, personal financial statements of the business owner. They want to understand this borrower. Can this borrower purchase this building, buy this business, and can they handle it? They want to know capacity. Can they repay the loan? So that's where the financial statements come in. They want to look at, if they look at financial statements and they're not making any money, they're not going to approve them to take a loan out if they have no income, unless you can explain what is going to change that they will be able to make the payment. Capital is money that you're the skin in the game. So how much are they putting down? How much is their money? Where is the money coming from? It's not as strict as residential, but they still do check and they still do care at times. Condition of the property and the market. So I live in Western Pennsylvania in a smaller area. And I remember when I first started doing commercial loans with buildings, and some of the banks would come back and they'd say, you live in a tertiary market. I'm like, what the heck is a tertiary market? Well, if the population is under a certain size, certain banks will not lend in tertiary markets. So then it's like you start learning these things. They don't like the market. They don't like markets that are depressed. They don't like markets that aren't growing at a certain rate. And so, when you get those, okay, I need to either find a community bank type of lender, or I need to go to a hard money lender, or that's how you start kind of figuring out what you're doing and where you're placing things. And then the last thing is collateral, which is like the appraisal. And the appraisals are different in commercial. They're not a set price. Usually they will throw an appraisal out in commercial, and they'll get 3 bids from 3 different appraisers. And those appraisers will all say, I'll do it for $1,200. I'll do it for $2,000. It's been like that a little bit in residential lately. But then it comes back and the buyer will decide which typically they want to go with the least expensive one. Sometimes timing changes it. But you don't have to wait till the borrower signs disclosures to order the appraisal. None of the rules apply that you follow in residential, which is nice. What's not nice is some of the differences I have in one of the slides coming up, where rates aren't handled the same way and they use all these different indexes. So it's just things to get used to so you can speak the language. So of these 5 things, it kind of looks like this. I thought this was a good scoring model to look at. So in each bank or lender can have different scoring models that they use, and they weigh them. So like here, they see these things, right, as risks. So borrower's financial health, like we were saying, that the borrower, right? So they look at things like debt to equity that they own. What is the ratio of income to their debts? And this is has the heaviest weight for this bank. Industry characteristics, barriers to entry, how that industry is doing. So right now, banks are not as keen to invest in real estate mortgage companies because we've had such a tough time. Macroeconomics, so that's a lot of times like local markets, competitive strength, like the market share a business may have, management's reliability, political risk. So just kind of shows you what this bank would weigh when they were doing it. The same thing with this is an SBA loan. I'm going to try to make it a tiny bit bigger. So SBA loans are always tough for people, and they do it kind of on points. And what they do is they'll say, okay, what's the debt service ratio of not just the building. We're used to looking at rental buildings. The DSCR is used with businesses. It's used, what is debt to income? And so they kind of say, all right, 1.35 third year, 1.5 second year, most current year, they're deciding what point factor would get applied to it. And then if you look to the bottom of that first column, repayment ability, DSCR 1.25, if it's lower, they're going to give them 4 points versus the 20 points. If you go all the way to the right, personal credit, if somebody has a credit score over 725, they're going to get closer to 20 points. If their score is between a 600 to a 650, they'll get 12 points. And so they do it on a point basis to see where somebody scores. And most banks, they'll say, okay, we want to at least see a 30 score or a 55. They each determine where their risk level is on how and if they'll lend. So you're learning a different way to look at loans unless you niche to what you know or what you want to learn. Now, let's see. Documents that you collect. So the documents you collect are different. There's at least a foundational same documents you collect in residential. You collect pay stubs, we collect bank statements, you collect Social Security information in residential, and then you add additional things based on if it's a veteran or if it's somebody who's self-employed. And the same does apply in commercial, but there still is some core fundamental things you usually will get on most deals. Things like sometimes you need business plans, you need a resume of the owner, you need the business's information. So like this is a IRS EIN letter, formation documents, their personal financial statements are like the traditional things that you collect. And like I was saying, banks will give you some of the documents, but there's also documents that you create yourself, agreements. So we have a financial services agreement, the authorization to release, because it can be easy for a client to walk away, and a lot of commercial lenders will actually charge up front. They'll charge an application fee because you do a lot more work on the front. And then once you send it to a lender, they will do most of the work. So there are documents that you create, and that's where we're putting a lot of those documents in the lab so that the people that are in the lab can download our documents and use them as the foundation for the deals that they're doing. And then, so kind of the easy way when you start doing commercial and business loans is, this is one of the maps that I have inside of our commercial power up in the lab, but it's like it's mapping. So, okay, I have a buyer that is calling me. What type of a buyer is it? Do they own a business? Are they an investor? Or are they trying to get money to start a business? Then is there a building involved? And what type of a building is it? And then what are the factors around the deal? I got one last week, and it was the buyers had to close. and this was just Friday, I think, the buyers had to close by the last day of May, or else the property was going to go into foreclosure, which there's what's called foreclosure rescues in commercial. Can't do it in residential, but in commercial, they have loans specifically for that. And so you might have to tell a client, hey, through SBA, through regular financing, it takes 60 days. We can't do this, but we have a foreclosure rescue and the rate's 15%, but we need to get you into this. If you really want this property and you really want to do it, then this is what we need to do. And then we will finance you into a more long-term product afterwards. But if not, you're going to lose the deal. And so running through some like high level factors is the first part. And then the most challenging part is finding the lender that fits with the three things above. So like I said, commercial is not digital or tech driven. You'll need to create your own digital and tech pieces of it. It's not, you don't have to make it rocket science, but it is easier if you create some of your own little systems. I think I have in one of the next slides showing kind of how I made my own commercial application. That you could do too. Rates are not locked in when you get a contract. It depends on the bank. It depends on the deal once again. It's not like DSCR. So in a lot of commercial deals, the rate is determined once it's ready to go to closing. And so that can stress clients out if they're newer to commercial and they're buying their first commercial building or they don't understand it. Most of the time, commercial rates don't change as frequently, but man, the last year, hey, this one guy, I think he thought we were screwing him because the markets were changing so constantly. And he had like 15 properties we were working on. I mean, it was such a nightmare, but you know, making sure, and that was because my loan officer and I was learning how to set those expectations up front. So making sure you explain to them how it's different in commercial and how it's not determined. Here's a ballpark for right now. Also, loans are not a fixed, for example, usually in DSCR loans with, the residential DSCRs we can do in residential, there are 30-year fixed options or a 5-year ARM amortized over 30 years. In commercial, you typically have, and this is true of local banks, every commercial deal I did in a local bank before I knew how to do commercial, and it's something I say to borrowers because I think it's an advantage as a commercial broker, is, hey, you go into a bank and they're going to be doing a 5-year ARM where the rate's fixed for 5 years, and they're going to amortize that loan over 15 years typically. Once in a while, they'll do 20 years, which maybe wasn't a big deal 3 years ago when rates were 3, 4, and 5%. But right now, SBA rates are 11%. So their DSCRs are thrown off. Having the ability to amortize a commercial loan over 30 years, which you can do as a commercial broker, there's enough banks that offer those. So you still pretty much lock, it's like an ARM, 3 to 5 year ARM typically. So the rate's in there for 3 to 5 years, but the loan is amortized over 30 years. It helps the payment get spread out. It helps the deal actually work. And clients want that cash flow. And so explaining these things is part of what you do when you start offering commercial deals and learning how commercial terms work. I got off the phone yesterday with a new bank that I'm going to start working with. They're a community bank. One gentleman owns it. He sets the rates, and right now his rates are 8%, which most local banks are 9 to 10. I typically am not the lowest rate. I typically am the one who can do deals that other places can't. I just found a wonderful bank that I can place strong borrowers, which is where sometimes you lose those deals. So that's why in commercial, your lender list, the time you've spent connecting with lenders and finding these niche lenders that's where your value is when you build a commercial book of business, is the relationships and the lenders that you work with. Where can you find commercial deals? The agents that you work with. I guarantee you there's somebody in their office that does commercial. I will warn you, it is tough sometimes when a residential agent does commercial because they don't know that you don't get a pre-approval letter or a fee sheet. There are things you can get at certain banks and with certain loan types, but so your B2B partners, CPAs are great resources, your client database. So when I kind of started really realizing this, I had a client, he owned a construction business, and he came to me because he was buying a house for 500,000, and he was talking to me and said, you know, my wife wants to buy this franchise and it's 100,000. He's like, I don't have enough to do my down payment on the house. And then, I went to our local bank here who I do our business banking with, and he's like, and they want 20% down on the franchise, which is 20,000, and the franchise fee is 15,000. That's 35. And he's calculating it all. And I'm like, hold on a sec. And that's when I really started understanding business lending. And because he had a construction business and he had a great credit score, I was able to, so I did his home loan, I did his residential mortgage. I got him a $50,000 line of credit that was one of the checks I think I showed you guys. So I got him that line to go use as the down payment on the franchise, and that paid the franchise fee. And then I did the SBA loan that bought the franchise. So that's kind of an example of where your client database can have other financing options within it. You just need to start having the conversation, putting it in your signatures, talking about it, that once you start learning that you are offering these types of loans, and then be willing to work the deals that you're spending the time learning and refer the ones to someone you build a relationship with, so you don't look like a fool before you learn how to do them. You want to refer them out. Like if you came to me right now and you said, hey, I've got somebody who has a church, I'd be like, I'm sorry, I can't help you. I'll give you somebody else, because that is not a niche that I have leaned into yet. Oh, you know what? I forgot to say this. There are websites out there. This is a really cool exercise. If you go to Biz Buy Sell, I think it's bizbuysell.com. So Biz Buy Sell, create like a free account in Biz Buy Sell. And go start searching around. You can filter it. You'll go see deals that it's a business platform where people list their businesses for sale, and there's business brokers, commercial brokers, and there are a lot of them that don't, nobody's ever no one's ever come to them and said, hey, here's some products you could offer your clients. I can tell because some of these businesses, like this one right here, high margin 30-year-old custom fabrication company for sale. It was like 2.4 million. Adirondack Spruce Lodge, located in Wilmington, New York. That's where they list these businesses a lot of times with real estate for sale. And then in the description, they'll put seller financing available, because that's really what they've used before to help a buyer not need to come up with as much money. Whereas if they knew there were SBA loans where you don't need 20% down, I guarantee you they don't know. I got through 15 years in this business buying commercial buildings. I could have bought this building I'm standing in with 0 down, or 5% down, or 10% down. I didn't know. No one told me. So now you're told. This is an example of the application link I created. I did it with, if you're familiar with lead pops. So we use lead pops for our lead funnels that take in customers' information. So we've created funnels for our commercial deals to come in to get that basic initial information. We've also created funnels. So if somebody starts working with us, wants to refer us deals, we set it up so that, name of person referring, so that we can make sure we know who's referring the deal, who's supposed to get the check if they're referring business over. So you can set these up because you can make custom funnels now in lead pops. This is just a little example of in the lab. So the lab is for loan officers who want to open their own brokerages, current broker owners and who want to open commercial or just get better at running their brokerage. So there is the lab feed where it's called deep dives. That's what this is. We do deep dives each week. So breaking into commercials one, understanding commercial lenders, how to choose lenders. So that's one of the next topics we're going to be going through. And then there's a section that has courses. That's just where we put the information. So that's in the middle there, getting started in commercial lending. So commercial versus residential, steps to begin originating commercial financing terms to know, commercial credit 101, the commercial loan process. And then there's a whole section on lenders. I don't want to overwhelm people. So the lender section we've started and we're putting a lender in for each type. And we'll continue throughout the year to add other lenders as we teach them. And I add videos in there for what this lender is good for, good with, who to contact, how to sign up. And I think that is it. So hopefully that added some value. If you've been thinking about doing commercial, you can grab I have a digital business card if you wanted to meet and talk to me about any of this. It's you go to dot card, spell dot out, and then collab. Or I have a QR code that you can scan if you want to do a discovery call with me. And I'm happy to answer questions or help point you at least in some type of direction. We're looking to find like-minded people to keep adding to the lab community so that we can all start really learning and growing our businesses together, because that's how it's going to happen. Maybe each person has a different niche at first as we get into this. It's really fun when you get into it. So if you guys have questions, we have a smaller group this week than last week. I'm happy to answer some questions if you guys want to unmute and ask me any questions about this introductory stuff. If not,
I have a question for you.
Yeah.
Number one, I appreciate you doing this. This is really nice. I'm actually in the middle of doing a construction deal for my own, for a business that my husband and I are going to buy.
Okay. So right now you're doing a construction deal. You're
Well,
buying a business?
Yeah, no, we're trying to actually, we're trying to buy the building and then start the business in the building, essentially is what we're trying to do.
A new business or an existing business?
Brand new.
So brand new. So you're buying the building to put a brand new business in the building.
Yeah.
Okay.
And I have a friend here locally that does commercial, and so he's been he's doing our loan for us, and so he's been sort of teaching me along the way, and his bank will allow referrals. So if I send him something, he can do it, and then I can get paid for it.
Mm-hmm.
The question that I have that I haven't asked him yet, because I feel bad asking him because he's my friend. But what do you make on these? I mean, what do most commercial lenders make on them?
They're different on every bank.
And is it and that's not regulated, right?
It's not regulated. It depends on the loan size. It depends on, I'll use SBA. So SBA lenders, some of them will pay, and they'll state this. So some will just pay 1%, some will pay 1.5%, some will pay 2%. Some banks say you as a commercial lender have to charge your points, and that's what you make. So that's typical in hard money deals. But it's always great when you can find a lender in commercial that what you earn is on the back end, right? Because none of us want to be charging people on $1 million deal 2 points. That's $20,000, right? That's hard to do, but it does happen.
Okay.
And so it all depends. Does he work at a local bank?
Yes. It's like a smaller bank. And so he works there, and he said that if I send him a referral, most of them will pay 1.
Okay.
On the referral, if it goes through or whatever. But I just wonder what he makes on it, right? If he's paying me 1, is that coming out of his? or is it in addition
It
to?
depends. It depends. So every bank is different with like there's literally 20 different indexes from LIBOR to the stock exchange. Like it's crazy. Prime, and it's how banks determine what they make is the spread between, kind of like us with rates. There's a spread. So what they decide their rates are is based on the spread that they make. So because it's not even regulated, every bank's a little bit different.
Oh, okay.
If,
Okay.
if that hopefully makes sense. And there will be some you'll get spread on the back, and then there's some that you can do a combination of charge a little bit up front with spread on the back, and then there's some that you're going to have to charge all on the front.
It kind of reminds me of reverse mortgages a little bit.
Mhm.
Because that's kind of how reverse is. Like you don't have to charge upfront.
Yep.
But you can if you want. It's like that's what it kind of reminds me of. It kind of reminds me of in the very beginning of, when we used to get yield spread and decide if
Yep.
we're going to
Yep. Before
totally
all the
register that.
rules and the caps and stuff, you're exactly
Yeah.
right.
Yeah, that's kind of what it reminds me of. Like you
Uh-huh.
kind of decide on if you want to charge 4 points or not. Like,
Yep.
and then if you were to recommend, like, you had your buckets, right? Learn one specific niche. If you were to pick one to start with, what's one of the easier ones?
I would say the easiest ones would be the business loans
Okay,
without real estate.
got it. Okay.
I think they're the easiest. They collect less documents.
And those are only on existing businesses that are already established.
It's like the Wild West. Literally, I find different products every week. It's insane. Like it's unreal. Like I find it exciting. I'm like, holy shit, I can't believe that. What? Like it's because you have private investors who decide they like a niche because of something, and they kind of enter the mix of they'll lend on this, and it's how you find them, and it's just really interesting. I mean, I've had this brokerage for 5 years, and I didn't know until a year ago that you could do these business loans. And there's people doing them that don't even have the experience that we do from lending, where we know so much how to structure deals, put them together, yields, all this stuff. There's people who, and that's probably why there's a lot of people who open business or commercial, like, and a lot of times they'll open a business loan brokerage and they just focus on one niche because they don't know about the other stuff.
Oh, I
And
gotcha.
so, and so if I go back up to the buckets, where are they? Where are my buckets? Buckets, buckets, buckets. No, I have them. Well, I'm looking for the picture. So I would say the easiest ones are here, the business financing, no real estate loans. Because I think you'll have your quickest wins there. That's why.
Mm-hmm.
I think you'll have your quickest wins, and you won't waste as much time as you will in SBA, investor, commercial on the right. I feel like most of us have started doing the gray zone, the DSCRs. If you haven't, then that would be one that I would say to do too. I would say the rentals, the DSCRs,
Yeah, yeah, I've done quite a few of those. Yeah.
because aren't they nice?
Yeah, it's funny. I don't know. I find like some of them are so shady, right? Like some of these lenders are so shady. I mean, like they'll sit there and they'll tell you like, "Oh, we could do that. We can do that." And then like, "No, no, we can't." And you're like, "Where did it say you couldn't do that?" And they just it's like they make it up.
Well, it's a human being making the decision. That's why finding the right partnerships with like having these strong banks that when the UWMs started offering DICRs, like that's one thing I tell my team. I'm like, do not place your non-QMs at an A lender. That is not their niche.
Yeah.
They are using the lenders that we should be going straight to, who are specialized at these, because like one of my favorite DSCR lenders that we use, they have, they go up to 8 units. They have a light rehab, a heavy rehab, where the owner can do the rehab. It's not like rehab in the residential space. Literally, they just have to get quotes or estimates or material bids. I mean, it's so easy. So they have light rehab, heavy rehab, then they have where they can do I think it's called builder, like a builder spec. And then they have one for builders who have at least built at least 30 homes. That's the type of DSCR you should be working with if you want to get really good and known for doing DSCR loans.
Yeah, no, for sure. What is sorry, I don't mean to hog the time, but like, what I find, and this is more of just a comment, honestly, but what I find is that it's really hard to find commercial lenders.
Yep.
Like, it's like they're, like underground or something. Like, other than just like going to like a normal, like Bank of the West or, one of the major banks, right? It's like, you can't find commercial lender brokers. Like, they're like nowhere to be found.
Commercial lender brokers, meaning
Like,
like,
if you're brokering a commercial deal, like I don't know, it's like you just can't find people that just do that. And it's the craziest thing to me.
and I'm just like the actual bank you place with, or like a broker, like how we have a brokerage, you mean?
Yeah, like how we have one, right?
Yeah.
Because I typically, sort of, with insurance brokers, I always tend to gravitate towards brokers because I know they have the most options versus banks, right?
Yep.
Direct banks. And so when we started doing this deal for ourselves, like that's what I was trying to find. And I couldn't find one.
Really?
Yeah, it's and I'm in Denver. Like it's like not, I don't live in Podunk.
Well, I think more LOs. I mean, it wasn't a pitch for what we're doing, but that's why, because and one of the members are in here. Jenna's in here, like when I looked at trying to become a commercial broker, like literally the amount of money these guys want. And I get it now because I've spent 5 years talking to banks to find the good ones. So if you're gonna, right? Because if you're gonna take your time and help other people and you can't do loans where you can make money, right? But there's
Right.
got to be a happy median. And the residential mortgage broker community is used to everyone just openly sharing, which I get. Like I'm in that community. I've been in that community for years. And I do and would do that happily. But when so few people have commercial or have learned commercial or spent their money or time learning, like that's why we need some of these things that residential loan officers and brokers can plug into.
No, it's smart.
If I
I mean,
answered,
it's a
if I
smart.
answered your question.
No, it is. It's a smart. I mean, it's a smart move on you, honestly, because there's like so few. Also, there's so few women, right?
Mm-hmm.
It's still again very male dominated.
Yep, it is. It's nuts. So like I still have someone, I can't, like nobody in my community can use him, but like my mentor who I paid a good amount of money, I still go to him at times because he gave me a huge list of lenders. And that didn't help either because I would just look googly eyed at 300 lenders. It's like you got to literally find the niches and then learn how to know where to go to, like when you have a deal, it's like these images, right? Like, so it's taken me a while. I thought I was trying to get our community up and running by, I think it was April originally. And even just building out the stuff that I started with, it just takes a long time to do this stuff.
Yeah,
Takes
no,
so much more time. I wouldn't want to be a teacher. I mean, I enjoy this, but I don't know how teachers do it.
yeah, for sure.
Like, it's crazy. Or do you own a brokerage, or are you a loan officer at a brokerage?
No, I own my own brokerage, and so my friend, uh, he works for this bank or whatever. He just lives in our community, and he knows a lot of commercial realtors. And
Mm-hmm.
we were looking for a commercial realtor, and then I got him to do all of our stuff for us. So I'm intrigued by it because even when I'm sitting, he's been doing it for 20 years, right? But even when you talk to him, I mean, he can't give you like a real answer on anything. Like, and I'm just like, oh my God, dude. Like,
Yeah, I mean, literally, and I'm gonna stop recording this because I had to record it because last week I didn't and it was fuzzy. Where do I stop recording? Stop. I'll stop share. Yeah, I mean, I don't know how to explain it completely because I mean, I've been through it, but I mean, I've owned a brokerage for 10 years. I started my